What are American depositary receipts? Have you ever wondered how American investors can easily buy shares in foreign companies? The answer lies in American depositary receipts, commonly known as ADRs. These financial instruments are issued by United States banks and representing ownership of shares in companies based outside the United States. This means that American investors can trade these ADRs on U.S. stock exchanges just like they would with regular stocks. So, how does it work? When a U.S. bank purchases shares of a foreign company on its home stock exchange, it holds those shares and then issues ADRs in the United States. Each ADR usually represents one or more shares of the foreign company, but sometimes it can representing a fraction of a share. This setup allows investors to manage their investments in U.S. dollars, as both the value of the ADR and any dividends paid are in U.S. dollars. From a libertarian viewpoint, ADRs serve as a practical tool that enhances economic freedom and choice for investors. They allow individuals to allocate their capital across borders with fewer regulatory barriers. This aligns with the libertarian principle of free movement of capital. By providing easy access to foreign markets, ADRs enable investors to diversify their portfolios, reducing risk by not limiting them to domestic opportunities. Foreign companies also benefit from ADRs because they gain access to a larger pool of investors and capital. This is a positive aspect of globalization, where market forces drive investment flows rather than government intervention. Libertarians often point out how financial innovations like ADRs lower transaction costs and increase market efficiency. This supports their belief in voluntary exchange and minimal state interference in financial markets. In practice, ADRs can be found on major U.S. exchanges, such as the New York Stock Exchange and NASDAQ, as well as over-the-counter markets. They are subject to U.S. securities regulations, which provide some protections for investors but also introduce compliance costs for foreign firms. While libertarians may critique excessive regulation, they generally support the transparency and standardization that make ADRs a reliable investment option. In summary, American depositary receipts are a straightforward way for U.S. investors to own shares in foreign companies. They are traded in U.S. dollars on American exchanges, bridging international markets and supporting libertarian ideals of open markets and individual choice. Even with regulatory requirements, the structure of ADRs is designed to make cross-border investing accessible and efficient.